Hi there, welcome to Kneppy Invest. Babylon Pump and Power, a small cap company on the ASX. In fact, you might call them a micro cap company with a market cap of about $15 million, did release an impressive quarter. And when I say impressive, I'm only talking in regards to what this company actually does and the size of the company. But there are still plenty of red flags when it comes to this company, and those red flags prevent me even thinking about taking a position in this company. You probably could call Babylon Pump and Power a mining services company. They have two sort of divisions or segments. First one is equipment rental, and the second one is maintenance service. Now, their equipment rental is primarily for the oil and gas and mining sector, and their maintenance services are for diesel engines, particularly large diesel engines. The company was founded in February 2017 by Michael Shelby and are listed on the ASX not long after it was founded in November 2017 via IM Medical. So it seems like this was a backdoor listing. And the current co-founder and EC is Michael Shelby. The current market cap of this company is only $15 million. That's at a share price of 0.6 cents. Shares on issue, and this is one of the red flags in my opinion. 2.5 billion shares on issue. And not only is there a lot of shares on issue, the amount of shares that have increased since January 2018 is quite extreme. In fact, there's been a six-fold increase in shares in issue over the past 5 years, from 372 million to 2.5 billion. So this is a significant red flag for me. I don't like that amount of shares on issue, and I don't like the very fact that the amount of shares on issue have increased significantly over the past 5 years, and the ticker code for this company is BPP. The last time I did a video on Babylon Pump and Power, it was just after this company did a significant capital raising, realizing about $7.4 million. But because the share price was so low, and to raise that amount of money, this company had to issue a lot of shares. In fact, the shares on issue went from 1.15 billion to 2.38 billion just to raise that amount of money. And this is one of the problems that microcaps have, particularly if they need to raise money. There will be high dilution, particularly again if they have to raise a lot of money. So for a company with a market cap of less than $10 million, if they need to raise about $10 million automatically means they have to double or more than double the shares on issue. Before we have a look at the March quarter results for financial year 23, let's just go back 1 year ago for Babylon to look at how this company has performed over the past year, looking at a like-for-like comparison to the March quarter 1 year ago to the current March quarter, because I want to get rid of any seasonality a company might have. Now, 1 year ago, receipts to customers 7.3 million. And one of the reasons I have done a few videos on this company is because they have been operating cash flow positive quite a few times over the past few years. And they were operating cash flow positive by $1.1 million in this particular quarter. Now, even though they were operating cash flow positive in this particular quarter, the cash on hand actually fell by about $200,000. And at the end of this quarter, they had $1.3 million of cash. And that is a concern moving forward, the low amount of cash. Not only that, they also have debt, which I'll talk about in a second. Before we talk about the debt, which I'll look at in the next slide, and that is a significant red flag, in my opinion, for this company, let's have a look to see how this company performed in March quarter for financial year 23. Why was this an impressive quarter? Receipts to customers up to $10.1 million, a record quarter for this company. And the first quarter, this company has seen receipts over $10 million in one quarter. So congratulations to Babylon Pump and Power. And because receipts grew at a quicker rate than their spending, this company was operating cash flow positive by $2.4 million in this one quarter. And for the first 9 months of the year, they are operating cash flow positive by $1.8 million. So what did the company's management decide to do with this operating cash flow of $2.4 million? They actually decided to spend $1.9 million on capital expenditure, maybe buying new equipment to rent out. They also decided to repay $900,000 of their debt, and also they spent $453,000 in acquisitions. So overall, the money they spent in financing and investing activities meant the cash on hand actually fell by $800,000. And at the end of this particular quarter, they only had $1.3 million of cash on hand. But I do like the very fact that they used some of this cash flow in operations to decrease their debt. So let's have a look at the amount of debt this company now has on its balance sheet. One of my favorite sections of an Appendix 4C is Section 7, Financing Facilities. I always have a look at this particular section for all companies that releases either Appendix 4C or 5B, because I want to see how much debt a company has. Because again, debt, maybe not again, probably the first time I've said this in this video, but debt is the biggest killer for companies like Babylon Pump and Power. We don't want to see companies like this overburdened with debt. And at this point in time, Babylon Pump and Power has about $10.8 million of debt and $2.4 million of unused financing facilities. So if they do burn through cash in this current quarter, at least they have about $2.4 million of cash they can use in those financing facilities. The other reason I like this section of the Appendix 4C or 5B is you do get particulars of the financing facilities in Section 7.6. For instance, NAB invoice finance facility, $4.1 million, rate variable plus or minus 5.72%, secured by GSA. But the main thing I want to see moving forward for Babylon Pump and Power is to remain operating cash flow positive by over $2 million a quarter, and then they can use that money producing operations to pay down their debt. In fact, I would say this should be the #1 priority of Babylon Pump and Power's management team. Now let's have a look at the receipts history for Babylon Pump and Power. I've already mentioned this was a record quarter for the company, and it was a record quarter by a distance, in fact by $2 million. The previous record was a September quarter last year with $8.1 million. But I'm a little bit wary because if we do average out the last 3 quarters of receipts, you get $8.1 million, which is a little bit more than the previous 5 quarters, which averaged out around about $7.5 million. The one thing I want to see when I look at receipts history for any company is receipts or even revenue, if I'm looking at revenue, growing through time. It doesn't have to grow consistently, and definitely for Babylon Pump and Power, it hasn't been growing consistently. In fact, back in 2021, we saw a significant decrease in receipts. In fact, in one quarter, receipts was only $2.8 million. Not sure what happened in that particular quarter. But generally, over the past 5 years, receipts have grown for Babylon Pump and Power. The question I have moving forward is whether this particular quarter was a one-off. Whether this company can see more quarters like this over the next, say, 2 or 3, whether they can maintain $10.1 million of receipts in a quarter. Now to some interesting, fascinating things I did find within Babylon's commentary of their Appendix 4C. Always like to have a look at the commentary because sometimes you can find hidden nuggets within it. And I'm not sure if you can find these 3 points as nuggets, but it did give me a better insight to how Babylon is performing, or has performed, is performing, and might perform in the future. Now, the first point, receivables of $4.3 million. I would have preferred some context here because is that abnormally higher than usual or abnormally lower than usual? And it does make a difference because if receivables of $4.3 million is abnormally higher than usual, that means the operating cash flow of $2.4 million could have been higher for the quarter. Now, the second point here gives an insight to how management is thinking about the future. Positive outlook and earnings momentum forecast. Now, you might argue that most management of companies on the ASX around the world tend to be positive, tend to be biased towards the optimistic, but you don't always find that the case. Particularly in the past year, I've seen a lot of management teams being a little bit more wary, a little bit more pessimistic about the future. So at least Babylon's management are optimistic about the future. And the third point is sort of suggesting that the operating cash flow of $2.4 million and even the receipts of $10.1 million it could have been a little bit higher thanks or benefiting from record collections during the quarter and the timing of certain payments. So there is a possibility, and this is how I read this particular bit of commentary, that the next quarter won't be quite as impressive as the March quarter. The management of Babylon Pump and Power might be optimistic and positive about the future, but you can't say the same thing about the market. In fact, there is fairly negative sentiment in regards to Babylon Pump and Power right now, even though the company did release an impressive Appendix 4C. This is the weekly chart of the company going back to when they listed on the ASX. Share price when they listed was around about 2 cents or so. Share price went sideways all the way through to late 2020. And then share price went on a really nice run from about mid-2020 to the end of 2020, start of 2021. And the share price reached a high of 3.8 cents in late 2020. And ever since that high, the share price has been in a downtrend. In fact, the share price has fallen from 3.8 cents to a low of 0.4 cents, which was reached in September. And right now, the share price of Babylon Pump and Power has been struggling to get above 0.6 cents. So it's been trading in a range between 0.6 and 0.4 cents since September of last year. So that's about a 7-month period. The share price has been trading in that 0.2 cents range. So no doubt, with 2.5 billion shares on issue, there are some pip traders out there just trading a 0.1 cent rise or drop in the share price. That's all I have for this look at Babylon Pump and Power's impressive quarter. Impressive in terms of the company being operating cash flow positive by 2.4 million, a record quarter in terms of cash receipts. But the big question I have moving forward is, can they continue this momentum through the next 2 quarters, 2 or 3 or 4 quarters? And if they can repay down that debt, and possibly we'll start to see the share price move out of this trading range between 0.4 and 0.6 cents. That would be very important for me moving forward, because at this point in time, share price is too low, too many shares on issue, and I need to see this positive momentum of the company being maintained. And even though management are positive about the outlook, doesn't mean the company will perform financially. So the next few quarters are very important, in my opinion, for this company. If you have any questions about Babylon, any thoughts about this company, if you're a shareholder of Babylon and you'd like to give us your thoughts on the company's management, how they have performed, I'd love to hear any insight from you. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you are or need financial advice, make sure you find someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.